Hey everyone, I'm Pranay Parikh. I am from Ascent Equity Group and from MD to Entrepreneur podcast. I'm here with Alex and Aziz, Screw the Stock Market podcast. Super excited to talk about how I was able to buy $250 million worth of real estate in the past 16 months and help thousands of doctors change their lives passively.
Hey there, thank you so much for tuning into the show. It means so much to me and Aziz that you are actually listening, that there's people really listening to the show. We're having fun with it, and we hope that you're getting a lot of value too. Education is just one of the first steps that anyone should take when they're on a journey towards financial freedom or personal development. And so it's great, you're doing the right things. I want to suggest a second step that you might want to consider if a lot of the things that we're talking about on the show are resonating with you. Consider visiting our website, legatoinvest.com/invest. And there's a button where you can click to gain access to our opportunities. And what will happen is you'll schedule a call with us. We'll talk, we'll get on a Zoom, and we'll get to know your investment experience. We'll get to know you. We'll learn about your objectives. And then if it's a good fit, we'll actually start to present you with real investment opportunities from time to time. And you'll be in the driver's seat where you can say, no, I don't like that one. And yes, I do like that one. And those real decisions, that means that you're actually in the game towards your financial freedom. So consider visiting legatoinvest.com/invest. Again, that's LEGADO invest.com/invest. Hey, everybody. Thank you for joining us on Screw the Stock Market. Today, we are talking with Pranay Parikh. And Pranay is an apartment syndicator who has been able to acquire a lot of real estate pretty fast. And we're excited to hear about his journey and learn a little bit more about how you do what you do. Thanks for being with us today, Pranay.
Like $250 million worth of real estate.
A little bit, yeah, about $250 million, yeah. So
oh, that's cool. That's a lot. That's a cool way of phrasing it. $250 million.
Only.
Well, awesome. We're excited to have you with us. And why don't you tell us a little bit about your beginnings and kind of where you started from, and then we can jump into kind of your journey towards real estate and world domination.
So, I won the lottery by being born where I was. I was born in California in the U.S. citizen, and my parents came from India, born and raised. And my dad, which I visited, came from a small town, middle of nowhere, barely have running water. And he did education, became an engineer, was brought to Silicon Valley as an electrical engineer, and really that more than anything else in my life has changed his trajectory. But his parents wanted him to be a doctor, and he could barely get like an injection without fainting. And so he's like, don't worry, I'm going to be an engineer, but my kids will be doctors. And actually he got pretty lucky that both my brother and I are both medical doctors in the US. He's an ER doc, I'm a hospitalist. And so I did that. I graduated residency, and like most of your listeners, I realized that, I could have done the 401k and all that stuff. And, 20 or 30 years later, yes, I'd have a good nest egg and I'd be able to retire. But I don't know. Those are the prime years of my life. I wanted to retire or at least cut down a lot earlier than that. And, I want to practice medicine the way I want to practice. I don't want to be forced to work. And so that's why I looked at real estate. And actually, initially, I didn't do syndications or what is called passive real estate, which I will explain in a little bit. But I did active real estate, which is what you guys know. You go out, you buy a property, and you're a landlord. And it was okay. But what I realized is I got super lucky and I hit a home run after my first property, which was 4 units, a couple blocks from the water in LA. That I spent hundreds of hours trying to look for my next property, and I should have just been working instead, and that's when I found passive real estate. I realized that I can invest in other people, almost like a hedge fund, that go out, find a property, renovate it, and sell it. They take a little bit of return, right? There's a little bit of fees, but 95% of the work is done, for me. And if anything, they're able to run it in a much more efficient way than I can as a medical doctor. And, I was working full time up until pretty recently. And so after that, I realized that there wasn't much education, and I really like education. I usually teach at the medical school after I graduated about passive real estate or syndication. So my partner and I created a course, and we had thousands of mostly doctors, but dentists, pharmacists take our course. And after that, we thought we were done. We taught everyone how to find these deals, to vet them, negotiate. But I'd say 80% of them came up to us and they were like, yeah, now we understand everything you do. We don't want to do it. It's too much work. So you're already investing in deals. Why don't we bring everyone together, all our money together? We can get into better deals when we could have better terms. And that's how Ascend Equity Group came. And over time, we realized that not only are we a small piece, but now we can buy the whole deal ourselves.
That's awesome. That's awesome. How long ago was this?
So we created a course probably in 2019, and we created a Ascent Equity Group in 2020. So not that long
Oh
ago.
wow. So it's really recent, and you've been able to get that much momentum that quickly.
If you do the right thing for long enough and for the right audience, I think you can bring people along.
Wow. Okay.
That's really exciting. So tell us a little bit about the course, and I'm going to
Yeah.
actually.
So the course, it's created on Kajabi, and it's basically goes from not knowing anything about real estate to be able to find these deals. And these deals used to be called country club deals because prior to 2012, only certain people were able to invest in it. And even now, our deals, you have to be an accredited investor, which means you make over $200,000 per year for 2 years, or $300,000 as a couple for 2 years, or have a net worth over $1 million. Or finally, and this might be good for your audience, there's a couple tests you can take. And they're the Series 65, Series 7, but it's a math test, tells you that you understand different investments. And a lot of stock people take it, but it's good for people that want to get into alternative investments as well. So we created the course for them to teach them how to do it, find good deals. Because what our biggest issue was, and we have a blog, we have a conference where people were getting into bad deals without the proper education. And that's, as a doctor, as a high net worth person, as any professional, a lot of times you have a target on your back. A lot of people will try to get you into these mutual funds that have high fees, or they'll try to get you into real estate that has high fees. So our goal was just to educate people, and that's why we created the course.
Very exciting. So your audience for the course is specifically geared towards the passive investor, so that they can be able to vet among many opportunities who the good operators are, what the good deals are, and kind of what's a realistic projection, and a lot of those basics. Is that right?
Exactly. Yeah. Again, assumptions, right? Because with what you put into the model, so there's a big Excel spreadsheet. You could change a couple numbers, and the returns could go from 15% to 20%. So how realistic are those numbers? And a lot of people will be like, oh, but I don't know about Jacksonville, or I don't know about Austin, Texas, or I don't know about Indianapolis. You don't need to know the specifics. You just need to look at, are these numbers and percentage, like if they're saying they're going to increase rent by 10%, right? That's way too high. But if they're saying 3%, that's a pretty reasonable number, and you could extrapolate that for pretty much anywhere in the US.
Very interesting. Okay. Um, so from the course, you essentially then went on to build a community. And once you had a community, you were positioned to just mobilize lots of money and direct them at deals. So are you finding the deals yourself? Are you an operator, or are you managing a fund where you are investing in other operators' deals?
It's a great question. We're kind of in the middle. and it's a unique position that we're in. So the deals come to us actually. We don't have to go out and find the deals. And that's because we provide a lot of value to the operators, the ones that are running the day to day. So, for example, we handle all the investors, we will bring all the money. But we also will help them with operations. So the way I explain it to our doctors is, say you own like a 7-Eleven, right? And you're working every day. They're 9 to 5, right? 9 to 5, you're working every day. So that means you're exhausted by the end of the day. You don't really have time to be thinking, how do I bring in more customers? Or maybe I should change the price of X, Y, and Z. That's the operators. But because we're not handling the maintenance, the leasing, all that stuff, we're able to think bigger picture and how do we maximize profit for all of our investors. So, that plus all the money is a big win for the operators. And so they'll bring us deals. And uh, some of these deals are insane. So, for example, we closed on a deal in August 22nd of this year. So, about a couple months from now, when interest rates were in the sixes and sevens. But this deal had an interest rate of 2.9% for 9 years, which is a killer deal. Anyone would love that deal, but it was brought to us. We're like, yeah, we want that one. They brought like a couple to us, but we're like, yeah, we specifically want this one. And, interest rates are even higher now. Actually, since then, interest rates have gone up, almost 2%. So because of the value we bring to them, and then for our investors, we're also, not only are we bringing them the deal negotiating, but because we're in operations, we have real control over what happens and what doesn't happen.
Very interesting. Okay. Please, you're in mute. Sorry.
So, in terms of the operators that you're working with, how are you marketing to get them, or are they just how are they finding you essentially?
So that is the people that we're going out to find because we want a very specific caliber of operators. So people that have billions of dollars that they're managing, they have a crazy track record that they've bought and sold, tens of properties. They have returns in the 20% per year. So, we go out, we make these connections, but we're able to vet sponsors at a much deeper level than I could myself personally, right? So, since we tell them, hey, we're going to write you checks of $15 million, they give us all their books. They show us all their properties. And so we're able to get a much deeper appreciation for what's actually going on with these operators than even I could do on myself, by myself.
Now, in terms of scaling, though, I
Mhm.
mean, I'm sure you didn't start off with the ability to write $15 million checks right off the bat. So, how did you entice the first group of operators that you worked with in terms of getting them to kind of bring deals to you? Did you just kind of go with lower scale operators that had a less, high end, background, or I mean, how did you go about it? Or were you able to just kind of right off the bat raise large amounts of capital quickly? And if so, how? Sorry, that's a multi-loaded question.
Yeah, that's one of the nice things about not being in real estate because we didn't know what we couldn't do. Right. So our very first operator that I'm still in contact with, they have 30 years. They've been in business for 30 years, which in real estate's forever. Never lost money, have done really well. And I just didn't know. And actually, my partner, business partner, I have two business partners. All three of us are doctors. We were reminiscing that this one person that's very well known in Texas, he said, this one operator, like, why would they ever give you the time of the day? And we've done probably like 4 or 5 deals with them since then. But had we known that, or had we listened to these people that we cannot work with this caliber of people, then we would have been small time. Our very first deal was 3 million, so it wasn't big, but we didn't know that we shouldn't be talking to this caliber of people. And so we have grown, 3 million, next one's 10 million, and it's just keep pushing ourselves. But the reason we're able to do that is because we create an audience, just like you have with this podcast. Before we needed it. So we had the course, but my business partner, he had a brand, a blog. We done conferences. He has his own podcast. So he built that, and then I joined that before we created this company. So it's an overnight success, but 10 years in the making.
Like that. I like that. Yeah. Yeah, it takes time, and I think the fact that you started with the course, which is interesting. I think that's a really smart model because I don't know if you're selling the course, but it could be an income stream in and of itself that could lead to an
It is.
audience and a community that can then
Yeah.
get you where you are, which is really exciting. That's really smart. To start with a really smaller, relatively smaller value add product like that. Um, so, okay, so now we're investing, we're doing all these deals. What are some of the big lessons that you'd like our audience, maybe people who are interested in passive investing? What are some of the valuable lessons that you think they should take away from this interview?
One thing I'd want people to remember is, you listen to this story and you're like, wow, these guys are just always successful. But I promise you, every single time we raise money, we're like, shoot, we're like, okay, we can't do this. We can't do this. Like it's too big. Like, okay, what are we gonna do? And I actually have my business partner. One of them is our resident contrarian. He's the one that says the world is always ending. Like we're gonna fail at this, and a lot of times like he's right that we would have if we didn't think about that. So we're like, okay, what are we gonna do? And it's been tough. Like I was the very first raise, it was 3 million, which now seems tiny, but it was a lot of money. And most people start off for their first raise like 250, 500, $1 million. And I was on the phone, I was texting people. It was a full-time job, and our next deal was a fund, kind of like what you had mentioned, which has multiple deals in one. Apparently people have to have this huge track record to do a fund, and no one told me. So I was like, "Hey, let's do a fund. We'll get a bunch of deals in one. It sounds so great. We'll have diversification." And we went from a minimum on our first deal of 25,000 to 100,000. I was like, "Yeah, we know plenty of rich people. 100,000 is a lot of money to put down, right?" And now I know that, but it's like I was like on the phone. I was like, "Hey guys, like we really need this money. Like it's a really good investment, and the fund is killing it." But it's a lot of it is like running into issues and growing. It's that next one after that was 3.5 million, and that went well. And then we did like a 8 million and a 15, after that. But it's pushing yourself, right? A lot of times we're like, okay, whew, that was tough, let's take it easy next time. No, you push. This other deal earlier this year. So we were raising money for a deal, and the economy just tanked, right? What do you do? Like, what do you do? You can't just be like, oh yeah, I'm walking away, because you put down a down payment, right? Just like if you buy a house, you're like, hey, to the seller, here's $200,000 or something, right? And you get to keep this if I walk away,
Mhm.
right? Now think about if you're buying a $50 million property, right? That deposit or down payment, earnest money that you're paying is a lot of money, so you could potentially lose it, And what do we do? You're asking for investors when people aren't sure what's going to happen. This is like in March or April of this year, and you just go out and you just explain to people like, hey, it's like the stock market that's falling apart. If anything, you should actually invest more in real estate. And then another deal fell into our laps to 2.9%, and it was 2 weeks after this first one closed, the one that we had a lot of difficulty raising money for, and at least in the beginning. So what do you do? Do you say no to this amazing deal, once in a lifetime for now, right? And this is when interest rates were in the fives and sixes. We're like, okay, let's try to figure it out. Like it's work, but it's pushing yourself outside of that bubble that you created. Trying to feel uncomfortable. And every single time we try to do something different. This last raise we just did, we opened like a week ago and we raised 10 million in like 8 days. And that's because we had done all these difficult things before. And of course you have to start with a good product, right? You can't you can't and you shouldn't want to sell something that sucks. Like you could, but you know, it'll catch back up to you. But we know the product is good, the investment is good, but it's pushing ourselves. And now I'm like, man, maybe we should have got a bigger deal. You know, why was it so easy? But we didn't know. We didn't know how easy it was going to be because, you know, now we're what? We're like so far into the economy. Everyone's talking about a recession coming up. You have no idea. And so we're going to find another deal and maybe bigger, you know? And so the key point, no matter what your type of investing in, maybe you're buying your own investments, is to just keep pushing yourself, you know, keep like if you don't feel like you're about to fail at least once a month, you're not pushing yourself hard enough. Or if you haven't failed at something in 6 months, then you definitely aren't pushing yourself hard enough.
Very interesting.
It's funny that you mentioned that you wish you had gone with a bigger deal, because a lot of times that's a common thread that we hear with a lot of people once they start on this path. And we always ask them, so what's a regret that you have? And they're like, well, one regret that I had is that I should have gone bigger at the beginning. And it's always kind of it seems contrarian in your thought process, because how can you expect to go bigger when you barely know what you're doing at the beginning and you're trying to figure out and you're muddled through? And in terms of asking for money, you're essentially going to the people and you can only go to them so often. They're not going to be pulling out multi-million-dollar pocketbooks at a time. So it's always difficult to kind of put that idea together. Like, how could have I gone bigger at the beginning? So, like, what could you say in regards to that? How could you have gone bigger at the beginning?
Well, you just said you don't know people that are going to give multi-million-dollar checks. So where do you go out and find them? Right. And there are plenty of people that do that. And, you know, it's hard in the beginning when you don't have a track record. So how do you build that up? How do you build up? Maybe you buy your own, you do a flipping business and you buy your own real estate smaller, you know, or maybe you partner with other people that have done it and use their network. So you know, for us, our trajectory, I don't think we could have done it, or I don't think I would want to have done it differently. And even this deal, you know, this deal is the first one we picked in a while. But so I would have loved this deal to have be bigger, but it was the reason we got it was because of its size, you know, and it was the exact deal we needed. But now we're like, especially this time of day. The other thing is also cycles, right? So a lot of people are realizing that it's the end of the year. They promised themselves that they were going to make some investments and they haven't. So they're rushing in, or they have all these gains that they need to offset with depreciation. And so we are realizing that the end of the year normally for investments is kind of slow, but for people interested in passive real estate, it's actually a hot time.
That's a really interesting takeaway. Like I'll say that in the raises we've had, like there's always this huge uncertainty, right? I know my network and I've done 506Bs where I'm only allowed to make the offering to people who I already know. And you're doing the ones where you're only open to accredited investors, meaning you could open it up to someone who you can do advertising and you can do all sorts of things. But if I have my circle that I know, but I have no idea how much money's in their pockets, right? And then, yeah, with
Mhm.
the economy the way it's been, I definitely felt a sense of people kind of tightening up and people feeling fear and feeling their losses in the stock market and all these things. And so it has been actually a pretty challenging time. But I do think you're right that, the people with the deepest pockets are probably still going to be okay and they still will be able to invest. And so um, it's probably a more scalable business to focus on the accredited investor because someone like that could, in theory, write 3 or 4 checks a year with you, right? Why not? Or more. Uh,
Yeah, exactly. And you know, the thing is to think about, okay, so I have this idea that people will invest maybe once or twice per year maximum, right? So if you want to do double the deals, you need to double your list, right? Or you can try to get people to invest more often. And that's what we've been looking at. So our list has grown 50% since August or July. And we have been actively trying to do that. And mostly that's through marketing. We go to conferences, we sponsor events. I'm on like 2 or 3 podcasts a day, you
wow.
know? So, and I have my own podcast as well. So it's how do you increase that list? Because you still want to get people in, and that transition is a little tough. I'd say 506B to 506C, because then you are a lot of times excluding people who are 506B, and that kind of sucks because that's the people that helped you grow in the first place. So I don't envy that decision.
Yeah, it's a tough one. I mean, I think in our experience, it's been, that's one of the things that made me most excited about this is to make these opportunities available to people who might otherwise not have. And I've had one or two people say, I've wanted to invest, but I couldn't because I wasn't accredited. Thank you for this opportunity. But then
Yeah.
most of the time, I'll get people who want to invest. And then when they see what that minimum investment is, they don't do it. And at the end of the day, a lot of times the only people who actually invest tend to be accredited. So it's unclear. And I think I'm not sure which way to go either, but I see the pros and the cons of each. Um, so okay.
Yeah, you just gotta help those, unaccredited people become
Oh
accredited.
yeah, that's the goal. Um, so let's see. So right now, tell me a little bit more about how you've grown your list. So you said you're on podcasts all the time. How are you getting on podcasts? I'm planning a podcast tour myself, so I
Yeah.
definitely would appreciate some of that.
So, I hired an agency called Interview Valet. They're awesome, but very expensive. So, it depends on if you have a team, if you have a team versus, if you are doing it yourself. So now I have a team, so I'm able to have them apply for me to be on podcasts. It's really hard to figure out like an actual ROI from it.
Mhm.
And so it's nice to do. It gives you a lot of credibility, but there isn't a huge ROI, at least initially. So I don't know yet if it's a great use of my time. I just like talking to people. So
This is awesome.
one of my goals is to meet interesting people through my podcast and guesting on other people. So in that, it's a huge success. So that is difficult. We've done Facebook ads. We've sponsored conferences. And then we have that media company. So that my partner has. So that gives us a lot of free advertisement because he's out there. He has his own podcast. He has a blog. We have the course. So the course has anywhere from 500 to 1,000 people every year. So that's people that would be interested in us. And so uh, I think our cost for acquisition would be a lot more if we didn't have that brand.
Sure.
Uh, so, um, but for you guys, I would probably double down on the podcast, and I would think about where and there's actually a clear um, epiphany that I had recently. Like most podcasts that I go on, the audience are not my ideal client. Like mostly I go on real estate podcasts, and more likely they're people that want to be who I am,
Hmm.
um, or or are more successful than me, which is cool too. You know, but this podcast would actually be closer to my audience. People that are professionals that don't want to invest in the stock market because it sucks. And how's that 60/40 portfolio doing? It's sucking right now. Bonds are sucking too, right? So uh, that is much more ideal. Uh, it would be great if everyone was accredited investors, but hey, we all start somewhere,
Sure.
and so I think being more selective with where I go to, but also in the beginning, I'm fine. I was on like the Best Ever podcast and a lot of these like other podcasts where I'm building credibility, right? So now when people search my name, they're like, "Oh wow, this dude does nothing else but sit on his butt and be on podcasts." And which I love podcasts. So I think a lot of people use that. So I would for you, I would try to go for people that are like in other like I'd go on an engineering podcast, right? I
Mm.
would go on a, I'd go on engineering. I'd go on like a pharmacist podcast, or I'd be like, hey, here's my message about that the the stock market is not for everyone. You need to have a well balanced portfolio, and X, Y, and Z, and bring them back to your podcast, and then you can kind of warm up that lead. Sorry, I don't know if that was
No, that's
that was
awesome.
a
That's
question,
very
but
good advice. I really appreciate it.
yeah,
Um,
yeah,
well, Pranay, tell us a little bit more about your specific podcast. I'm curious just about what your show's
yeah,
about.
yeah. So it's called From MD to Entrepreneur. Let me switch
Oh,
this
look
a
at
little bit.
that.
Yeah. So,
I like it.
oh, and then I would definitely get one of these guys. They're like they're from. It's called Impact, and they're super cool. It's like they're like $50 or something, and you can even have like multiple brands.
Hell yeah.
So yeah. For
Pro
those that
tip.
can't see, it's just my logo under my microphone, so it looks like very professional.
It sure does.
Yeah. So it's called From MD to Entrepreneur. It kind of talks about my journey becoming an entrepreneur, because a lot of people, especially many of us first generation, they want us to be, doctors, lawyers, and engineers, right? But what happens after you become one of those, right? That's not the end of it all, right? And you don't necessarily get the life that you want just by becoming one of those, right? You get a decent salary, but you're still trading your time for money, and that sucks, and I don't know about law or engineering, but a lot of medicine is changing, and it's becoming a lot more corporate. I was actually talking to an anesthesiologist earlier today, and she was like, yeah, some private equity company tried to buy her practice and just make it a lot worse to work at, because they don't understand. They try to optimize for the dollar and don't necessarily think about patients or doctors or burnout or any of that. So, what you need to try to make that more tolerable is money, right? You need to be able to buy back your time. So, I was talking to her. She's 49 years old, and really in her prime of her life, but she still has to do 24-hour shifts. Like, could you imagine doing 24-hour shift? At what? Imagine podcasting for 24 hours. Like that would suck, right? And she still has to do nights as well, right? And she has 3 kids, and so I was like, yeah, you should need to buy back your time. Like, try to figure out how much money do you need to make. And first, like, do you even need to make that much? Like, are you willing to take a pay cut not to have to do those shifts? But if you reach a certain amount, then let's see how you can make money elsewhere. And it doesn't have to be passive like in real estate. It could be active. Like maybe she starts a business or she buys a business, right? And so it's the whole podcast is about kind of my journey as an entrepreneur, multiple businesses, the podcast, and also talking to industry experts that have done just interesting stuff. And I try to really balance it out. So I had this recent podcast about all the trauma that we've go through as we're growing up and how it limits us and keeps us thinking small and not to the best of our ability. I talked about this other one where entrepreneurship is super lonely, and it is, right? Like I'm in this small little house in the back of my place by myself, and I get to talk to cool people like Alex and Aziz, but it's still, there's something about not being able to meet up, shake hands, talk in person. So, how do you combat that? So try to really keep it all different aspects of entrepreneurship because I love how the hustle culture is encouraged now and people are looking into side hustles or side gigs. But I feel that a lot of times only the positives are emphasized. So I try to emphasize really it all holistically.
No, I think that's really key and that's really important. I know, like, I've discussed this before, and Alex and I have talked about it before, just in terms of like our families and our upbringings. Well, I mean, I guess a little bit less with you because your dad is more entrepreneurial, but
Yeah.
I know with my parents, they're kind of got to become a doctor, lawyer, or engineer, go that track, and then you just buckle down and you just work until you die,
Yeah,
which
exactly.
essentially what my brother and I both did. I mean, I did law and he did medicine, um, but when I try to show them that I'm trying to do different things outside the spectrum, they have a hard time understanding, and the risks associated with them kind of frighten them a little bit. So having those conversations and kind of figuring out how to manage that and get that work-life balance, I think it's really key and important on the process. And it's something that's not really addressed as much. It's just work hard, work hard. You got to put in the work, but you know, you got to figure out how to do that and manage your life as well.
They'll come around eventually. My dad's in most of our deals.
Oh, how cool.
Yeah, that's good.
How cool. Yeah, I mean, I think I think the three of us as children of immigrants, right? Like it's a really special thing because we all have that like, we saw more than anyone, I guess, how much they sacrificed. I remember my parents like missing their family and missing out on funerals and weddings and all that stuff just to give us that other opportunity for something better. And so we have this drive, and that's really something I think a lot of we're all from different countries, I guess, but we all have that in common, which is a big driver, I think, in that community. Um,
Yeah, and I've been trying to think about how to instill that in my son, and without I always thought we were like a lower middle class, but we were pretty well middle class. We could have afforded a lot of stuff, like that PlayStation I really wanted, and my dad never bought me.
could have.
but it gave me that desire and thirst, right, to work hard and buy the things that I wanted and provide for my family, right? So this is now I have a PlayStation. So it's going to be how do I keep my kids from having everything they want, and still to have that thirst and hunger to succeed and make it out on themselves.
It's kind of funny that you say that. I was just reading it was some sort of random news blurb about a day or two ago about a Chinese man who won $32 million in China, and he came in to collect the money in a costume so no one could see what he looked like. And you're assuming because he doesn't want people coming after him for his money or whatnot. No, his main concern was that he didn't want his wife and son to know that he had money now because he didn't want them to get lazy and not continue to work hard.
Actually winning the lottery in the US is actually very dangerous. The chance of you dying or dying by suicide is actually very high. So it's actually one of the worst things that can happen to you. Very
Yeah,
counterintuitive.
I've read that. I think it's because a lot of them are just not really prepared for the wealth. A lot of them tend to come from like very like kind of poor backgrounds, so they just kind of go insane with the money. They either blow through it really quickly and they're depressed that there's nothing left, or they become very paranoid and isolated from the people around them, which also leads to them going downhill. So yeah, I think money management is key. Learning how to invest it, how to take care of it, and how to grow it.
Yeah, I think if I had like 10, 50 million, I don't think probably have a nicer car, but not much else would change. I'd still be doing this business, and maybe I'd have a couple other businesses. We were talking about exit plans for our business, and we were like, I guess we could sell it, but what would I do? I'd just go and start another business. So why would I sell this business that I'm having a lot of fun in and I'm helping a lot of people if I have to go out and build another business from scratch? So we're in this for the long run, and we want to really give people the best real estate investment we can.
Now, in terms of that, in terms of like the future ideas for your fund and your business right now, what are your plans? Like, how are you going to continue growing it? Um, are you just going to continue with the same path of what you've been doing and just kind of double down on it and hope you get even more investors so you can buy more properties, or do you vision pivoting into something different,
We
utilizing
really
your
like
resources?
Yeah, we really like what we do. I went to this conference and there's a guy that does something similar, but a much larger scale. They have a fund, and what they do is kind of like venture capital, meaning that they go in, they provide some money, but they also provide expertise to these smaller groups that are in real estate and help the company grow over time. And they get a percentage of future profits and all that stuff. So I'd love to be venture capital, but for real estate. And then that way, you get exposure to all this other stuff, like stuff you don't even understand, right? Like racetracks or like casinos or like self storage. So it'd be cool to provide capital. And, a lot of times you can help people that maybe don't look like you normally think of people that look like in, the older Caucasian, white Protestant. Like, so you give more opportunity to people like us, or just across the board. And so we can be more inclusive and take some more bets, with a fund. So I think overall, I think we'd like to move to the fund structure, but we're kind of building up towards that.
I'm not gonna lie. I've always had a dream of being on the Shark Tank and just kind of being sitting in one of those chairs. So yeah, I can identify with that.
Awesome. Uh, Pranay, it's been really amazing talking to you. You have just such an easygoing attitude. It's to accomplish what you've accomplished. I would imagine that you must have been going 100 miles an hour, but you're so soft spoken and gentle and peaceful. It's kind of a cool dichotomy. It's awesome to see a nice guy going far and winning and doing good things. And it seems like you really have a lot of values in why you do what you do. And so it's really awesome to see a good person doing good work and getting ahead. It's really awesome to meet you.
Yeah, I was reading about the dude that started In and Out, and he had a bunch of options to cut corners, right? And he said, we'll cut corners on everything except the ingredients, right? And that's why In and Out, you guys might not have it elsewhere, but in California, it's the best,
People are
and
loyal. Yeah.
uh, yeah, yeah, people are loyal, there's always a line, people wait an hour for In and Out because they don't sacrifice, right? They've stuck to their values about ingredients, about family, nothing's frozen, and this article I was reading, it was a lot of people make decisions based on spreadsheets, right? A spreadsheet decides that, maybe this lettuce is cheaper from India or something, just something, or maybe if they freeze their patties, it'll last a day longer, and it makes sense if you're just in front of a computer looking at these spreadsheets. But when you're really thinking about the people, the quality, it makes the world of a difference. And those compound together, right? And there's so few people that are doing the right thing for long enough that it's pretty easy, and like, I don't do anything different. Like, we do real estate, right? People have been doing real estate for over 100 years, but the way we approach it is a little bit different. And I think people resonate with that.
Awesome. Pranay, thank you again for being on the show. Really, it's been a pleasure meeting you, and I hope we'll be able to keep in touch.
Cool. Do you want me to go over the website and email?
Yeah, please feel free. Feel
Yeah,
free if you have.
yeah.
Yeah,
Please,
Yeah.
yeah. Let us know how
Okay.
people can get in touch
Yeah.
and
Yeah.
how can they can connect with you.
Yeah. So our website is ascentequitygroup.com. My email is Pranay, Pranay, at ascentequitygroup.com. And the podcast is From MD to Entrepreneur, and you could get it anywhere: Apple, Spotify, Google.
Awesome. Thank you so much.